Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So we got to talk about markets. As I mentioned in my previous video, melt up continues, right? We did get from my last video, I talked about the three rate cuts being, or two more rate cuts being expected for the year. And the equity markets basically rallying up on that news. And we see that the S&P 500 and NASDAQ, if we look at it, continue to break all-time highs, right? And, there's a lot of talks about valuation and fears that, prices are quite high. We heard also Powell today discuss about how prices are highly valued, and they continue to move up higher. And so this is what the chatter is today. And, part of, after rallying quite a bit, we're seeing somewhat of a pullback in the equity indices, right? So when we look at this thing, when we look at the price action and the prices overall with S&P 500, we still see that we're still in bullish territory. So trying to short this, trying to bet against it would be a very, very terrible idea, and has been a losing trade since the beginning of this turnaround in April of this year, right? We completely broken above all the tariff fears that started in February, and we're continuing to inch up higher and higher to that S&P 7,000 level. Now, will we reach there? Time will tell. But if I were to look at, charts here, could you say that we could see another run up to the 6,800 level? Sure, that's definitely possible. Anything's possible. But some sort of pullback like we're seeing right now is definitely does make sense after rallying quite a bit since after the FOMC. And we're seeing the same thing here in NASDAQ. NASDAQ, which is very interesting, continues to melt up higher. And the Russell 2000 testing, actually it did break the double top that we see here. And we're pulling back a little bit now, but NASDAQ looks ready to blast off higher, especially with its momentum that it's got and this level that it's tested. We'll see if if we fall back below, and if we have to come back, retest, and break out higher. And Dow Jones slowly inching up higher as well. So overall, what I make of all of this is that you got to stop shorting or being on the bearish side, because markets continue to melt up higher. Now, when we look at from a positioning point of view of large speculators, now the small speculators are definitely long this market, but the large speculators surprisingly are short the S&P 500 and the Russell 2000 as well. So there is still leg room from a positioning point of view for markets to move up higher. Same thing with Russell 2000. It's looking more juicy there, and more potential for a run up in the Russell. NASDAQ, on the other hand, we did see the overcrowdedness and the longs there kind of pulled back. But I would still stay away a little bit from NASDAQ and prefer the S&P and RTY more on the positioning point of view, and also the Dow. But NASDAQ, definitely, we're seeing that that move higher and higher. When we look at individual stocks as well, we look at the big tech names. Google, right? We're seeing red today, but Google had quite a tremendous run. Meta, hovering around the trend line here, looking ready to also pop. Netflix, same thing. We saw this quite nice kind of push up higher, and now we're just kind of hovering after making highs. Apple, Well, Apple. I mean, is there any surprise here? Right? We discussed this in previous videos that rotation, uh, is likely to happen after a lot of these stocks have gone up, right? So Apple finally reaching to all-time highs, and it hasn't tested 260 level, but we could be there soon, right? And when we look at Apple more shorter term, after rallying quite a bit, we're getting this, definitely needed pullback after seeing this aggressive move, especially after yesterday. When we look at other tech stocks like Microsoft, right, pulling back after earnings, continuing to do so. Tesla, right, been ranging for quite some bit and then finally had the breakout. Amazon. Now Amazon's pulling back but has yet to surpass the February 2025 highs. And Nvidia underperforming today after yesterday's big spike on the news that we got that they're planning to invest quite a bit in OpenAI. We're seeing the pullback here, questioning how whether the amount that they stated is true, whether they will be investing that amount, and we're seeing basically Nvidia pull back that move today, and we'll see how long we'll see if we get back to price level 1 today after that news coming out. So moral of the story, stop betting against the markets. Markets and equities continue to be irrational longer than you and I can remain solvent. Go with the flow, go with the momentum. Yes, pullbacks are needed, shakeouts are needed, and very likely that those shakeouts will probably be bought again, and we'll continue to see markets move up. And the markets will continue to assess whatever the central banks are saying, whatever the data is coming out, and so forth. Yeah. So that's all I have to really say in terms of other markets for bonds and currencies and energy and crypto. If you want more information on that, feel free to subscribe. We have a private chat room where we discuss more in depth in other markets. And yeah, and if you like videos like this, feel free to subscribe here. They're free. And hit the like button, comment what your thoughts are, and I'll see you guys on the other side. Cheers. Bye.